This is your LMAX Exchange Technical Update for Tuesday, August 22nd, 2017. Euro dollar. So the euro has been chopping around over the past several days, unsure whether it wants to see a continuation of these gains in 2017 to plus 2.5-year highs beyond the recent peak at 119.11 and towards that next key extension into the 121 area, or if this consolidation is eventually going to lead to a downside extension below recent support just under 117, exposing a retest of the 50-day moving average in the 115 area. Right now you can see here that over the past several sessions we've seen a lot of up and down trade, and so although we did see the market trade higher on Monday, it's nothing to get concerned about if you're looking for a breakdown, because at this point it's still a choppy consolidation. If however the market looks to establish back above that recent high that we saw going back to the 11th of August, which comes in at 118.50 about, then it could open the door for a resumption of gains through 119.11. But right now just a choppy consolidation, and there's still risk for topside failure ahead of a downside extension below last week's low, which comes in at 1663. Overall, it's also worth noting that weekly studies here are technically still extended, and so even if we do see the market push higher, as we've been warning in recent days, the risk for any big upside moves at this point are limited, and we still should see that more significant correction to the downside before this market considers a meaningful bullish move. Sterling dollar. Cable hasn't done much of late. The market's been consolidating its latest round of declines off the 2017 high that was seen several days back around 132.70. There is risk that this market sees another pullback over the coming sessions, certainly back towards that previous resistance turn support area in the 127s. That area was 127.75. Specifically, but we could see a pullback into the 127s, with setbacks expected though to now be very well supported ahead of 126 after the market had broken out in April of this year above 27.75, which had been a previous range high off of that plus 30-year low that we'd seen in October of 2016 at 118.40. So it does look like the structure is a little bit more bullish now with this market pushing up, and so these setbacks that we're seeing off 2017 highs are viewed as corrective, and we could see a little bit more of a drop into the 127s, but ultimately this market should be very well supported. Dollar yen. So dollar yen continues to pull back after the market stalled out several days back above 114. The risk now is for a retest of the 2017 low, which comes in just shy of 108 at 108.13. A break and close below that level would be a significant bearish development and could accelerate declines. At the same time, if the market is unable to establish below 108, we could see a continuation of some range trade that we've seen over the past several months, with the market bouncing and looking to head back towards the 114 to 115 area. Euro Swiss. Euro Swiss is content now, chopping around after the market had surged up to a plus 2-year high and the highest levels that had been seen since January of 2015 at 1540. Right now, the market after that surge is comfortable consolidating and allowing some overbought studies to unwind. The greater risk going forward, though, is that any setbacks are very well supported into the 112 area in favor of that next major upside extension beyond 115.40 and towards 120 further up. Aussie dollar. So Aussie is traded back to the top side after some significant setbacks over the past several days, but overall this market looks like it could be in the process of putting in a more meaningful top, and so the rally that we're seeing right now could be corrective in favor of a next lower top, and that will be confirmed if the market stalls out somewhere ideally ahead of 80 and breaks back down below the low in the previous week, which comes in at around 78.08. To break below that level would then expose a further drop down towards the 75 area. Dollar CAD. So dollar CAD has pulled back over the past few sessions since putting in an impressive recovery rally off the 124 area, 2017 and plus 2-year lows. The market had traded all the way up towards the 128 handle before stalling out and seeing this reversal into this new week. Overall, however, there still is risk here that we see the market well supported ahead of that 124.14 low that was seen several days back in favor of a higher low and a continuation of this correction back towards the 130 area. But we would need to see the market stall out around current levels ahead of 125, and we would also need to see a break back above 127.80 to strengthen this outlook and accelerate those gains towards 130. Kiwi dollar. So the New Zealand dollar has been consolidating over the past several sessions, but this comes after the market had stalled out sharply above 75, that critical psychological barrier. At this point, it looks like the market could be in the process of putting in a more meaningful top on a medium-term basis, with any rallies now well capped ahead of the next major downside extension below 72 and back towards 70, if not down towards the 68 area multi-day range lows. SPX 500. The S&P 500 is in the process of correcting off recent record highs at 2491, just shy of 2500, and there is risk building that the market wants to take out critical support here at 2400. A break and close below 2400 would confirm a bearish bias and open the door for a significant structural shift. At the same time, inability to establish below 2400 on a close basis will keep the overall pressure on the top side, and this market thinking about fresh record highs beyond 2491 and well into the 2500s. Gold. So gold has been consolidating over the past several months, but has been very well supported on dips, and ultimately the market has been slowly grinding higher. A lot of chop, but the pressure does continue to show to the top side, and this latest breakout that we saw above 1300 suggests that the market could be poised for that next major upside extension towards a retest of the 2016 high at 1375 further up. Only back below 1200 would compromise this constructive outlook for gold.